Morning, everybody. It's Monday, May 20th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at July corn up 3.5 at 456. July soybeans were also up 3.5 at 1231.5, and July Chicago wheat was up 18 at 669.25. Good morning, guys. I hope everybody had a great weekend. I think kind of coming in this morning, yesterday's open, last night's open, I think a continuation of a wet pattern for the next 5 to 7 days for a lot of areas that, quite frankly, needed to dry out a little bit. It'll be interesting to see, this week crop progress will be out this afternoon, just how much we got done in this window, because there has been, a little 7 or 8 days that we did have a pretty good window. But Dustin, throw it over to you for some comments to start the week. We saw fun data towards the end of the last week, continuation. They continue to buy corn, sold a little bit of beans, bought some wheat, but maybe just a few thoughts to kick us off, and we'll throw it around the room.
Yeah, thanks, Dan. The funds did buy some corn. It wasn't dramatic, but still in the right direction. They're certainly within range of flipping from, being very aggressively short to maybe even going neutral to even long. So we have to continue to watch that. I mean, this last, 3 days of price action, pretty good selling. I'd be curious to see how much of that was managed money and how much of that was, new positioning from the commercials. My guess is that there was a lot of farmer selling, like we've been saying in our commentary, as we got up towards that $5 mark and couldn't get above that 200-day moving average. But with that, are we ready just to say, well, it's over for the year. We're getting into the planting season. It's going to get planted, and the end of the seasonal is going to call for a top. I would say it's hard for me to get too bearish right now. It's because of acres. Funds are continuing. That's why I think the COT data is so important. The trend of what they're doing. Are they continuing to, either neutralize or maybe even get long? We'll find that out every Friday afternoon. If this last round of selling was a big increase in the short side of the commercials, I think that's going to be a sign that, the market just got to a hedging point, and we still have the rest of the year to kind of consider where to go. So the 475, 474.5 area, that's key. We held that Friday and overnight so far, back up to 481 to start the day. This is Dees 24 corn I'm talking about. That might be the range that we set for a little bit, in my opinion. I mean, it could be, still be to be determined, depending on planting progress, and there's really not a lot of new information that's going to come out. So, yeah, here's the hope.
It's good points you make. I mean, you reference crop progress will be out here this afternoon at 3:00 Central. We were looking at some stuff, just anecdotally from years past in terms of when you've had some delays, and by all accounts, some of the tough years. I mean, we are still ahead of the pace in some of those years where they did, early yield reductions, whether it be in the May or June reports. So, we don't want to, wave the white flag on this thing at this point, but at the same time, I mean, you still have to be cognizant that we are ahead of schedule for those anecdotally years, right? I mean, is that safe to say, Dustin?
Yeah, I would say, we're delayed a little bit, right? Especially in the states that, probably will have a bigger impact on final national yield, like parts of Iowa.
Sure.
So, anything, there's a lot of studies that show anything that's planted past a certain date, it's more subject to yield loss. You still can have a decent growing season and get through the whole season like we did in 2019. 2019 was amazing, actually, how yields came out. It had a pretty good finish. Am I immediately going to go mark down way below trend line with what we've had so far? Probably not. I would say, still I think the trend line in general is maybe up for debate at 181. We haven't hit that before. That'd be a new record to get there.
By what, 4 bushels, three and a half
Yeah.
bushels, right?
Yep, exactly.
Yeah.
So, a little bit of delay to start and a low margin year where maybe everyone's not going to throw the kitchen sink at it on inputs, maybe that couple rounds of fungicide, prices stay weak through the year. It's not going to be something that I would go and immediately put down above trendline yield unless we're getting the weather midsummer to get there. So again, getting back to that seasonal time frame, I don't think we're making new highs because of delayed planting though. I think if you just look at the balance sheet and you say 181, something we haven't achieved before, and a 14.8 demand is something that's extremely realistic, what we've seen in the last 5-6 years for total US demand. So those two things together just barely inch up our carryout year over year. And so anything, gives, maybe South American production's down a little bit more than we expect, and we continue to get good exports, or we hit a 177 yield, we start to fall into the debit on carry in or carry into 25. So I'm not too excited about market just turning around and going straight to the lows. It would have to be, some other event, in my opinion, until we get to pollination weather. But again, it's just pure opinion. Don't want to get too opinionated when there's still the value of hedging for growers. So,
sure. Ben, some thoughts from the East this morning.
Yeah, I think that what Dustin said is spot on. There's enough uncertainty in the corn market to probably keep it from having a full scale rollover. You look at a lower end of acreage to start with, and some delayed planting, which is not disastrous. You couple that with kind of I think a general bias that we've mentioned that we thought for financial reasons we could see a bigger shift towards beans, and that was validated in the March report. And then you ask, can you get even a further shift there out of necessity moving forward? So I think that corn is going to, I think volatility is going to pick up. We've cleaned the book out now up to the 200-day moving average, a combination of hedging, probably some automated trade there when the 200-day was not able to generate some additional buying. We fell right down to that kind of that trend line support, which also coincided with the 100-day moving average and held. And I think that I think it's going to get pretty choppy in here between, 475 and $5, 502, 509, whatever that number may be. But we traded a lot of volume in those previous weeks. So now we've kind of flushed out a lot of the resting orders. We've satiated the need for people to sell there. So we'll see how it plays out here. Enough uncertainty, though, that I think that you can start tweaking some things a little bit and not even get too imaginative and create an environment where all of a sudden corn is not as clearly burdensome as people thought it was going to be last year when it finally, saw its, solidifying a good supply. So.
That's very good. And then help us understand, Ben, through this last little drying spell, did we get some work done over there in the East in certain parts?
We did. We talked about this before we came on today. It feels like everyone, there's some people that are planted. Southwest Ohio has been really good for the most part. There's quite a few pockets up in the northern third of Indiana and Ohio, and even in western Indiana, that are struggling with being able to string together enough drying days before the next rain comes through to really get after it. Even now down in, let's call it southeast of Indianapolis, guys are 75%-ish type of planted numbers, but they're just not able to get the next window to get in and get finished. So a lot of variability. I did drive a fair amount this weekend from northern Indiana up in southern Michigan. There was a lot of activity. It was a gorgeous weekend. But then last night we came through and we had a pretty good round of showers. So I'm sure it's very frustrating for the producer, but it's just a touch and go. And we do have some more rain here forecast for Wednesday, Thursday, I believe.
Yeah. Jace, it looks like Northwest Illinois, by all accounts, was pretty well wrapped up or putting the bow on it for the most part. Would you agree?
Yeah, I mean, I think there's fields here and there, right, that people have been holding off on getting in, but for the most part, driving around for sure, it seems like most of the work is done up here in Northern Illinois. I did want to comment on, I do think this planning progress report today could be important, and we were talking about this for the before the war room, right? But to see a big jump up, I don't know if you guys know expectations for this report on what they're expecting.
Yeah, I saw 15%. Anywhere between 65-ish type of percent. I think guys were hoping for. A little short of 70, but somewhere in that area.
Yeah, I mean, a lot of years we're already 80, 90%, right? Some of those years that we're behind in 19 and 22, Dustin mentioned, where they cut yield somewhat on the May report. 2013 was behind, so we are kind of in line. In line is not the right word, but
trending.
Trending kind of where we are definitely behind. And I think the question becomes, what is the USDA going to do, or what's the market going to perceive the USDA to do on the May report or even the June report as far as yield, right? And that might just get funds a little excited or get the market a little uneasy. Just thinking kind of short term, how is the corn market going to react from a wet forecast over the next couple of weeks, especially if this report is disappointing on planning progress? It might just get people a little nervous. So I think it is kind of an important number just to see how the market reacts, where we could get, we just had a big pullback in corn, to Dustin's point, right? A lot of farmer hedging. We went right up against the 200-day, failed for 3 days in a row, and then a sell-off, back down to some of the other moving averages, the 50-day and 100-day, kind of starting off a little higher today. So I wouldn't be shocked if we had kind of a price-friendly planning progress report to kind of move right back up to that 200-day and try to shake up the market a little bit. So maybe we jump 50 to 80%, in a week too, wouldn't surprise me either, right? Anecdotally, I know a lot of guys were going pretty hard. A lot of guys want to plant in the perfect conditions, right? And so that they're willing to wait a little bit. But I know on Twitter and stuff, you're seeing guys just showing their planters all mudded up, and right. So guys get to a point where like, well, I got to get it in, and so it wouldn't shock me to see just a big jump either. So I think it's a big deal. This planning progress number could be, kind of make or break price movement here in the short term.
That's all good points, Jason. And we'll, like I said, 3:00 Central. So we'll take a look at that number. It'll be in our evening commentaries, and I'm sure we'll discuss tomorrow morning as well. Got a couple minutes here as we come into the open. Ryland, last week, beef production down 3.7%. Pork production up 0.9%, while the slaughter was also up 1.1%. So a little bit of data there. What's your thoughts on livestock as we start the week here?
Yeah, Dan. It's been pretty good close here on Friday for the cattle complex. Cash was higher, so packers paid up. I think we're starting to see this then kind of go easy on the slaughter and production, just because they know they're going to be paying up a little bit just to kind of keep the flow of cattle going here. So cash at 86 in 186 in Kansas, saw some 190 in Nebraska and Iowa, and $3 for dressed in Nebraska and Iowa. So all systems are go as far as cash goes, and we still got this big discount on the board. I think everybody's trying to wonder when that's going to converge at some point, but it feels like that's kind of been the direction right now. And funds have been pretty, carrying a pretty relatively small net long position at 37,000 contracts, but likely the price action kind of suggests that they were net buyers here last week. So we'll see about that. But I think everybody's focus is going to be on the cattle on feed report here on Friday. So usually we get a nice break, kind of little bit repositioning going into that. So we'll see. overall, I think that's kind of going to be the focus though towards the end of the week. But otherwise, like I said, I think the focus really just kind of the interim is going to be on that discount that June has right now relative to cash. But hogs have been kind of moving the opposite direction. New lows for the move here. Funds are still liquidating. As of last Tuesday, they were still net long 56,000. So they sold another 9,000 the previous week, and it just seems like the cash performance and kind of dismal cutout performance just overall is just kind of keeping the pressure on. So we're looking for that to change, maybe with a nicer weather conditions. So hopefully they've kind of reduced to a point they can manage, but just doesn't seem like we're getting the support in cash that everybody like to see at this time of year. So
very good. Well, we'll take a look and see how we shake out here today, and we'll keep once we see estimates for cattle and feed, we'll take a look at that a little deeper here later in the week. Nice to hear from Kyle and Nick here this morning. I talked to Kyle on Friday. He's up in northern Iowa, southern Minnesota, and they were rocking and rolling Friday. And looks like maybe they had to power wash a planter or two this weekend, but they're getting after it. So it's good to hear. Hope you guys are safe and doing well out that way. We just came into the open here. We got July corn up 2 1/4, 454 3/4. July soybeans are up 3 at 12.31, and July Chicago wheat's up 20 1/4 now at 671 1/2. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate all the thoughts and comments here this morning, guys. It was a good conversation. Look forward to talking to everybody tomorrow. Hope everyone has a great day. Thanks a lot.
Thanks, Dan.